Hello and welcome to the look ahead for Thursday, the 14th of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So this week, the focus has been very much on the US with US inflation data yesterday, and the focus tomorrow will remain very much on the US. We've got US retail sales, PPI data, and jobless claims, which could give us further clues over the timing of the first Federal Reserve interest rate cut. Now, currently the market is pricing in around a 66% probability of a rate cut in June, and that's despite that hotter than expected inflation data that we saw earlier in the week. So moving on to tomorrow, we've got retail sales expected to rise 0.8% after falling 0.8% in month-on-month in January. Now, strong retail sales is really going to underline the resilience of the US consumer despite interest rates being at a 22-year high. As far as PPI is concerned, this is wholesale inflation that we're looking at. Expectations are for it to rise 0.3% in line with a 0.3% rise month on month in January. On an annual basis, we're looking for it to tick up just a little bit higher to 1.1% after rising 0.9% in January. Now, sort of wholesale inflation, if that moves towards being sort of stronger wholesale inflation, that does tend to suggest that consumer price inflation could increase as well. So the market's going to be looking for cooler PPI in order to get sort of in order to support the view that the Federal Reserve will be cutting sooner rather than later. Also going to be watching jobless claims. Jobless claims are expected to come in more or less where they've been in the previous week at 218,000. We've seen that the US labor market has really remained very resilient over the past couple of months, even though we've got sort of, the Federal Reserve keeping interest rates high. The jobs market has remained relatively strong, and the jobless claims data tomorrow could indeed support that as well. Now, what does all this mean for the market? So first up, we're going to be looking here at the US dollar index. This is the chart of the US dollar versus its major peers. And we can see, we had that big drop off last week, found some support there around the 102.50 level, bounced higher. Now, the rebound higher has seen it testing that 103 level, hasn't really been able to break above that 103 level. If we get a close above 103, then that's going to be an encouraging sign for the bulls. But, the RSI is below 50. You've got the 100 SMA crossing below the 200 SMA. So these are, I would say typically bearish signals. Failure to rise above the 103 means we could see a test again of that 102.50 and down to the 102 level. Now, this is the gold chart that we're looking here. Gold this week reached all-time highs. Last week reached all-time highs, has just eased off for those all-time highs. Now, if we get stronger than expected retail sales, hotter than expected inflation, and stronger and weaker jobless claims, sort of pointing to a strong US economy where the Federal Reserve is less likely to cut interest rates sooner rather than later, then that could see gold prices fall back further. As far as support is concerned on gold, sorry, just to point out as well there with gold, do watch out for that overbought. It's in the overbought territory as well. So that's another reason just to be a little bit cautious about buying gold at these levels. You could expect some consolidation or at least a move lower. As far as support is concerned, you got the 21.50, the previous all-time high. Break below that brings 20.80 into focus. On the upside, if we do find that perhaps retail sales come in weaker than expected, or that inflation is cooler than forecast, then we could see those Federal Reserve interest rate cut bets build, and that could push gold back above its all-time high of 21.95 on towards 2200 and even 2300. That would be the next target after that. So sticking very much with the US, we're going to be looking here at the Dow Jones. Now, it's really interesting because despite that hotter than expected inflation read, we've still seen the Dow Jones edge back up towards those all-time highs. So it did reach all-time highs, the Dow, at the end of February. And then it's just really been in consolidation mode over the past few weeks. just edging higher now as we speak. Again, if we get data that supports the view that the Fed are going to be cutting rates sooner, then that could be the drive that the Dow Jones needs to get over that all-time high of 39,284 to look towards the key 40,000 psychological level. On the downside, support at 85,500. That's the support that we've been seeing hold over the past couple of weeks. It would take a break below that to create a lower low. And just finally, what have we got? Just bear with me. The other one to be watching here is Euro US dollar. As I said, data is very much focused tomorrow on the US, but we do have the ECB speakers, a couple of ECB speakers tomorrow. We did have a few ECB speakers over the past 24 hours. They very much signaled towards a June interest rate cut. Definitely seems that seems to be the preferred date over April, where they've sort of suggested that that's just going to be premature. Similar message from what we heard from ECB President Christine Lagarde last week. Looking at this chart here, we're still in that uptrend. We can see that it trades above that rising trend line. It's above the 200 SMA. The RSI is above 50. So there are some indications here that this is a bullish chart. Buyers are going to need to break over that sort of 109.80 level, which was the high from last week, in order to get towards 110. If you can get above 110, then that's going to be really quite an encouraging sign. As far as support is concerned on the euro, 109 level, that's one that we need to watch out for. Below that horizontal support, look out for the 200 SMA at 108.40. Below there, we could find that sellers gain traction. So that is all from me. I hope you've liked the video. If you do, then please do give this a like. And otherwise, if you would like to receive more videos like this, then please do press follow to subscribe.